is Josefa Noah, and I'm going to talk about the major trends in life insurance industry. The first that we have is the selective insurance. Basically, there's many insurers that they sufficiently try to assess risk by offering lower premiums to those with low risk. However, there's those that do have the pre-existing medical conditions or any other life-threatening conditions who end up paying high premiums. How this affects New York Life is that they offer different insurance programs that is basically term life insurance, and they pay low premiums, and it's just for a short amount of time. They've also joined forces with AARP Life Insurance, where they offer different insurance programs where no medical exams are required, and again, they also pay low premiums. Another major trend is the increase in privacy concerns. Basically, there's many different consumers who feel that their information, medical and financial, is being used against them, and that that information is being used as a marketing tool for companies to sell products to them, as well as impeding them from getting any life insurance at all. What New York Life has done is that they do have a very strict privacy policy. They protect against any unauthorized access to this information. They also refuse to disclose or sell this information to a third party. They also require different companies that service the different insurance products to protect the information and adhere to strict privacy standards. And they also update their consumers on privacy policies at least once a year. Another major trend is the lower investment returns prompting higher premiums. In the past, we've seen different strong performances from the stock market, and this has led different insurers to be able to offer lower premiums. And especially since losses and expenses exceed premium revenue, their investment portfolio would do so well that it would cover all these losses. However, with the economy how it is now and interest rates as low as they are now, the investment revenue is down, so they've had to increase their premiums. What this has done to New York Life is that they have not really been affected by this too much because they have stayed away from risky investments, and because they are a mutual life insurance company, they are not so affected by the stock market and its performance. Another life insurance trend is globalization. A lot of companies now are trying to reach different international markets. Currently, the well-insured aging population is needing less coverage in the future, so a lot of companies are doing different things to see what can they do to make more money, and going global is definitely one. New York Life, of course, has definitely done this, and they've gone global. They've spent over $800 million over the last 4 years in Asia and Latin America building offices. They also have offices in Argentina, Mexico, Hong Kong, India, Indonesia, just to name a few. And their New York Life International has surpassed $100 million in operating revenues in 2008, which is already up 36% from 2007, so they've done very well. And the last trend will be going public. Companies such as MetLife and Prudential have gone the public route, and they've been trying to capture profits in the stock market. However, this has not really affected New York Life as they've chosen to stay as a mutual life insurance company, and it's proven to be very successful for them. Okay, so now we'll continue with the SWOT analysis of New York Life Insurance, and I will start with their strengths. Their first strength is they have a great reputation and a great brand. Basically, they're the largest seller of life insurance, and they're also the largest underwriter of professional association insurance programs in the United States. So they have a really great reputation. They've been in business for over 160 years. You know, they're very solid. They've gone and overcome things such as 9/11 and, of course, the Great Depression in the 1920s. And they have overcome that, and I think they have proven that to other consumers that they're a very strong and solid company. They also have a strong financial strength and claims paying ability. They're also rated among the highest in its industry, and this is also very important because many other major insurers were actually downgraded while they still remained among the highest in their industry with great credit ratings. They've also denied getting any federal bailouts from the government, as many other insurers had to do, and this is due to their great amount of capital strength and ample liquidity. Another major strength would be their mutual status. They answer only to policyholders and not shareholders, as has been mentioned earlier. So basically, they do not have to take these high risks to meet Wall Street expectations. Of course, they also have great management. They have Ted Mathis, who has taken over for Cy Sternberg, and he has kept on with the same principles. He wants to continue having the company as a mutual life insurance company, and that's proven to be very profitable. They also have a strong international presence, as I mentioned earlier. And they also have a great research team. They have conducted their own research, and they have seen that, for example, CDOs and credit default swaps were risky investments with weak lending standards and questionable underwriting practices. So they didn't really want to invest in anything that they really couldn't analyze that well. They also have a long-term view. Because of their long-term commitment to their policyholders, they are not subject to the shareholders' pressure to have quarterly profit gains. So this has definitely also helped them a lot, especially recently. And diversification, they have one of the most diversified investment portfolios. You know, the 10 largest credit exposures amount to less than 2% of their whole entire portfolio. So they have very low level of exposure to just one firm. Their weaknesses, one of their weaknesses for their employees at least, is that they have 100% commission-based salary. Though this could be a benefit, it's definitely also a weakness, as during difficult times, many employees might find it hard to have a good salary. Also, their competitors' actions, they have MetLife and Prudential are definitely up there. MetLife actually has the same credit ratings as New York Life, and they had a higher net income in 2008. And also talking about their advertisement presence, probably perhaps they should have more exposure, more commercials, and more ads out there. Different opportunities is, of course, the changes in consumers' lifestyles. Men and women are just living longer, and as they continue to live longer, they're paying premium longer. So this obviously benefits many life insurance companies. Also, their good financial position, due to their high capital, they can pursue different investment opportunities that won't be available to those who don't have such strong capital reserves. They could also enter new markets, allow for growth. They could enter more international markets, open new offices, and expand their business. And also, lastly, their last opportunity would be their online access. Their website has definitely got much better and has improved greatly throughout the years. It's available in 4 languages, and each of their locations has their own unique website for their consumers to access. The threat, and of course the number one threat, is the current global economic meltdown. It has weakened equity markets, there's been credit losses, and this continues to dampen the growth of New York Life Insurance. It has definitely decreased some of their numbers, and it's something that, as spoken earlier, is something that they're currently working through and making sure they have enough capital and liquidity to work this out. Also, of course, the low interest rate is more difficult for insurance companies to be profitable when interest rates are low, so they would actually prefer when interest rates start to increase. And that's this one analysis. Thank you.
New York Life Insurance offers a 2-year program for undergrads and grads. It offers a hands-on experience with training and development, and also offers the opportunity to learn the company and the rotation. It also gives the grads and undergrads the experience to enter the financial industry and also in the world of the insurance. And the program that they offer is accounting, audit, information technology, investment management. And yes, do New York Life Insurance hire FIU grads? Yes, and that can be located at their www.fiu.com at career services, and there's a special link that you can click to, and has New York Life Insurance that you can go there and apply, and they offer full-time and internship job position.